Somehow we managed to eke out the best month the ASX has ever had in April. It was up over 8.5%. At one point it was 9%, all the way through yesterday. But giving most of that back today, and I think that needs to probably be the way that we look at things going forward. I truly believe what's happened over the last 26 days since the bottom of the market, we're up 25.5% before at the close yesterday, was probably a little bit of advantageous trading, considering how far and how hard we went on the downside yesterday during the actual initial starts to COVID-19. But May is most likely to probably start really showing up how big an effect this is going to be for our markets, for our economy, and for everything else in between.
And we're going to start getting some detailed data drops next week, giving us the best picture of what happened in March, and retail should be the most interesting one to watch.
Yeah, well, retail will certainly be one of them. I think we've already probably seen the scale of two stories with regards to staples versus discretionary. Woolworths and Coles have reported this week, and they had an amazing 3 weeks during the last part of March, but then it's evened out and slowed down, whereas discretionary has been telling us that they're under a significant amount of pressure, particularly those that are only able to do bricks and mortar. So that's one that comes out on Tuesday. Trade balance is also out next week. Why I highlight the trade balance is part of why we've been doing okay in 2018 and 19 on a GDP front is that net exports have been quite good. And that's because the value of net exports has been on the way up because our Aussie dollar has fallen, iron ore has been holding up, etc. And also because coal and copper have been in high demand. Now that's all eased off in March. And that's probably what you now need to see is whether or not it's not just talking about consumption with regards to GDP changes, but also whether or not net exports start to ease off as well.
And we've got the RBA meeting next week. Now that interest rates have bottomed out as low as they have, is there anything to be watching out of this meeting?
Probably not in terms of actual policy changes, but what you do want to start to hear is whether or not they see the current scenario playing out longer than what probably the government is forecasting, which is to September. The RBA is very much of the view that they are there to support in whatever shape or form they can. You are also starting to hear rumours that they may be also looking at, again, new policies, not for next Tuesday, but probably later in the year about whether or not they have to go down buying corporate bonds. All of that is probably where it is. Then also their view on employment. And the reason I say employment is part of their new look and new mandate is because they do need to find a way to get that unemployment rate down as fast as they can over the next 18 months, because we know from these disasters previously that unemployment remains very, very high, and a lot of jobs that are currently even on the job seeker and job keeper program won't come back. And until that does, you don't get wage growth. And that's what they'll be probably talking about now is how they can start to find ways to get people back into employment as fast as they can.